In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture
because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music, and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to these islands, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And 3, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future, in coastal areas it's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life.
Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Good Wednesday afternoon from New York City and points beyond to our worldwide audience. I'm Paul Sweeney, and I'm sitting in for Carol Masser today for Bloomberg Business Week. It's a light trading session as we would expect, but we are seeing modest gains in the equity markets. Coming up on the show, we're going to take a look at the virus. We're going to get the latest on the virus and the deployment of the vaccines. Plus, we're going to get an update on the fiscal stimulus and the impact it is expected to have on the economy in 2021. But first, let's get a Bloomberg Business Flash with Charlie.
All right, I thank you very much, Paul Sweeney. Happy Wednesday, indeed the penultimate trading session of 2020. Stocks higher, led by small caps. Let's begin there with the Russell 2000 up another 1.2% today. No record. We are looking at records for the Dow, the S&P, and NASDAQ. Small caps, however, are outperforming in the next to last trading session of 2020. S&P's up 9. Higher by 0.3%. Indeed, trading at a record as we speak right now at 37.36. We've got the Dow up 115, also at a record up 0.4. NASDAQ up 49, higher by 0.4%. 10-years up 3/32. 10-year yield 0.92%. Gold up 0.7%. 18.90 the ounce in crude. West Texas Intermediate up 0.5%. 48.24 barrels. So again, recapping, equities push higher. The S&P up 9, higher by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Today's Focus on the Fed is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Let's get a look at those markets again, kind of a light trading session. And as Charlie was just pointing out, let's chat with our good friend Kriti Gupta. She's a Bloomberg cross-asset reporter. Kriti, thanks so much for joining us here. We got a little bit of green on the screen. What are you taking away from today's session?
Well, it's pretty interesting that we're seeing that cyclical trade on New Year's Eve. You know, that the trading year wraps up. It's those cyclicals that are coming back. And you know, on the open show this morning for Bloomberg TV, we actually talked about financials in particular taking a good chunk of that. And this is a sector that's been so hard hit this year and has only recently kind of gathered some steam. So it's kind of interesting to see financials kind of in the middle of the pack when you're looking at just what sectors are moving today. But at the end of the day, it's that cyclical bit that's out in front. Like I said, pretty interesting way to end the year, even as we have all these kind of mounting risks for 2021.
Yeah, it's interesting. We were talking about, you know, this rotation trade that we've been talking about over the last several months, probably from that August, September timeframe. And one of the groups that, you know, I think a lot of strategists and analysts have said really needs to participate is financials. And you take a look at the financials and you just say, boy, with that yield curve the way it is, you think about the pressure that puts on their interest income margin. It's tough to make, you know, a bull case for financials.
It really is, and it's pretty interesting that this recent kind of leg up that financials as a whole took was really off the Fed giving them the green light to do share buybacks. It tells you how big of a piece that story is for the sector. It's not really coming down to kind of earnings or returns anymore. It's coming down to how much can the banks actively, you know, serve their shareholders, and whether it comes in buybacks or dividends. So I think that kind of green light was so important and such a big part of the rally that you're seeing. I mean, I'm stating the obvious here, but the fact that we could even see them unleash kind of the ability for them to issue more dividends going into 2021 at a time when, excuse me, that the underlying economy will still be struggling. It's kind of well known here that we're going to be seeing another dip in the first quarter of 2021 if we're not already. So that kind of contrast to me is something that's fairly notable.
Yeah, it's interesting. Also, the small cap stocks here. We were talking yesterday, Kriti, about, you know, how they were significantly underperforming. Today, kind of a turnaround.
Oh yeah, they're back on top as if nothing happened, right? And like they just didn't, you know, feel the hit that they took yesterday. It's pretty interesting when you're talking about small caps, because if you actually look under the hood, a lot of it is those biotech companies, pharma companies that are kind of rallying around those vaccine developments. A lot of it is also ESG and renewable companies on that stimulus talk, and then of course the companies that are like cyclicals. So it's a pretty interesting kind of dynamic of what's under the hood. And once again, it leaves the market extremely susceptible to whatever risks happen in 2021. If you actually look at the RSI of small caps right now, they've been in overbought territory for, I think, 2 months straight. So once again, there's room for a pullback, but I think it's consensus that small caps going into 2021 have a pretty bright future ahead of them.
Yeah, that's kind of what we've been hearing. And, you know, just looking at the volatility in the marketplace, I'm looking at the VIX here, just below 23, a far cry from the 13, 14, 15 levels that we saw before the pandemic, but obviously down significantly from kind of where we were back in the early part of the year when the pandemic just hit. But it seems, again, to kind of indicate here, modest amount of volatility in the marketplace, but investors seem to be, you know, generally in a bullish mood here. You look at the markets at or near all-time highs, volatility relatively low, setting up for what could be, you know, a lot of strategists are saying another decent year in 2021.
Absolutely. And it's kind of interesting that we're looking at, you know, we're talking about the VIX in its 20s as if 20 on the VIX is like the new 8 in 2019. Right. So it's kind of interesting that still has not breached that 20 level. It hasn't broken down below. And then I think it's really important to note here that part of that is just going to be how sensitive traders are to some of these headline risks. And I think as we all can kind of make this analogy with kind of like our mental state, the bar to kind of spook us after this year has been very high just because we've dealt with so much this year. And I think similarly, when you're seeing that on the trading front, we've gone through so many different types of headlines, whether it's stimulus, whether it's virus, now a new mutant strain of the virus, and then of course the election as well. There is kind of this high bar for traders to just panic at the moment. Even those lockdown headlines that you're seeing across the Atlantic, over in Europe, even in California and New York, they're not spooking traders the way they used to. So when we're talking about volatility decreasing or increasing, I would be very curious to see what actually is moving the markets. And I think a big chunk of that is going to come out of Washington. But once again, it's a wait-and-see game.
Yeah, it's a wait-and-see game. We did get that fiscal stimulus with the $600 check, and I guess the question will be for when everybody gets back, next week, and then we'll start looking forward to January 20th to get the Biden administration in place. Then the question will become, what can the Biden administration do in terms of more fiscal stimulus to bridge that gap to presumably a better second half of 2021? What can the Biden administration do? And I guess will obviously depend very heavily on the January 5th Georgia races as well.
It absolutely does, and it comes down all back down to stimulus, right? I mean, I could say that word 1,000,001 times and we still be so relevant. The idea, I mean, this kind of relates to the vaccine distribution as well, right? Because those are really the two risks. And a big chunk of the vaccine distribution, you're seeing them distributed from the manufacturers, but you're not seeing them actively go from these warehouses to the hospitals or to the people that need it, in the hands of the people that need it. And the reason for that is because of a lot of that distribution system comes from these state governments that don't have the additional aid they need to make that happen. And the federal government just doesn't have that access that the state governments do. It kind of makes sense, right? Local governments will be able to distribute easier. And so it all kind of ties back together to that stimulus piece. That state and local aid was the major sticking point, and we still haven't really made any progress on that front. So going into 2021 under a Biden administration and potentially a blue wave, depending on how Georgia turns out. That's really what we're going to be watching, how much of this money is going to be released to the public and to these state and local governments, and how quickly and easily can it get passed through Congress.
Absolutely. Kriti Gupta, thank you so much for joining us. As always, Kriti Gupta, cross-asset reporter for Bloomberg News, joining us on the phone from Bloomberg HQ in New York. Right now, it's time for the Bloomberg Business Week Bite of the Day, the one number that tells us a lot. Today's number is $200 million. A New York jewelry wholesaler admitted that he ran a $200 million Ponzi scheme, falsely telling investors he was using their money to buy jewelry at a closeout prices and then reselling it at markups of 30 to 70%. Instead, prosecutors said Gregory Altieri admitted on Wednesday that he used money from new investors to repay early investors. Altieri of Melville pleaded guilty in federal court in Brooklyn to wire fraud and securities fraud, and he faces as long as 20 years in prison. So that is the bite of the day. Real quickly, too, on the snapshot on the market, we are still seeing green on the screen. NASDAQ up about 0.3%. The Dow up about 0.4%, and the NASDAQ up about, and the S&P up about 0.3%. Right now, let's head down to our 99.1 studios in Washington, D.C. for world and national news with Nancy Lyons. Nancy.
Thanks, Paul. Congress is closing in on overriding President Trump's veto of the defense spending bill. A procedural vote is due in the Senate this evening after the House voted to override Trump's veto on Monday. The Senate could vote to override later this week or over the weekend. Trump vetoed the $740 billion National Defense Authorization Act because it includes steps to rename military bases named for Confederate generals, and also because he wants it to repeal a law that shields online companies from legal liability for content posted by users. Britain is now the first country in the world to greenlight the coronavirus vaccine developed by Oxford University and AstraZeneca. The approval comes as the UK battles a major winter surge driven by a new highly contagious variant of the virus. Oxford University professor Andrew Pollard served as the trial's chief investigator.
It's a moment to celebrate and to have some optimism about where we've got to today and moving forward. But we have to keep up this battle against the virus, not just here, but across all of the vaccine developers.
Britain has ordered 100 million doses of that vaccine. As for the mutating coronavirus, the new strain is making its way into Colorado. Bloomberg's Michelle Cortez says this version does spread quickly.
We know that it's already here. We're concerned that the increased transmissibility of this virus could accelerate the outbreak, and people really do need to be careful with the actions that they're taking.
Experts believe the vaccines now being distributed are effective against this new strain. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Well, Charlie Pello, the data continues to drive home the fact that we are clearly in the midst of the third and hopefully final wave of this virus. On the Bloomberg right now, a story, the second possible case of the highly transmissible UK variant of COVID-19 is being investigated in Colorado, a day after the state reported the first known victim in the U.S. COVID cases in New York City, they're approaching a 7-day average positivity rate of 8%, the highest in more than 7 months. And city hospitals are admitting more than 200 people a day for COVID-like illness. And a temperature snag, that delayed shipments of Moderna vaccine to Texas. So there's still a lot of headwinds out there, Charlie, in terms of the metrics for this vaccine.
Yeah, and it's funny, Paul, because as I was looking at this story on the Bloomberg, you mentioned the numbers. And I think back to March and April, had a headline broken like that back in the early stages of all of this, what it might have done to financial markets. But you look at what equities are doing today, next to last session for 2020, we've got the Dow, the S&P, NASDAQ, all trading at records and completely ignoring these kinds of stories. A lot of the COVID news, it's getting worse rather than getting better.
It really is, Charlie. You bring up a great point about investor sentiment. And, I guess what we hear in the marketplace is, yes, we know this is a bad time here. We knew it going in, unlike last March and April when we were blindsided. We knew this was coming. That's probably number one. And number two, there is light at the end of the tunnel as it relates to the vaccines. Now, even the vaccine data metrics aren't good, but again, a lot of folks are saying it's a tough rollout, but it will get better. There is light at the end of the tunnel, and I guess that is what we're seeing in terms of the market sentiment.
Indeed. I just remember vividly we would have Governor Cuomo's news conferences on Bloomberg Radio and television. He would say something relating to an increase in the number of people either diagnosed or the death toll, and you would see markets tank on that news. But again, today, as I mentioned, we've got the Dow, the S&P, NASDAQ, all pushing higher. One other coronavirus note, though, Vice President Pence calling off his planned Middle East trip as virus cases surge.
Very good, Charlie Pellet. We appreciate that. We'll get more coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Going to be very interesting to see where we close today. We do have stocks higher for now. However, we are well off session highs as the effort to develop and distribute vaccines to fight the coronavirus pandemic ramps up. The S&P up now by 6 points, a gain of about 0.2%. Again, well off session highs, but an update nonetheless. The Dow also at a record up 82 points, higher by 0.3%. Right now, the Dow Jones Industrial Average is at 30,419. NASDAQ also higher, also at a record. NASDAQ up 34 now at 12,884. That is a gain of 0.3%. 10-year up 2/32, 10-year yield 0.92%. Gold up 0.7%, 18.91 the ounce. And West Texas Intermediate crude up 0.7%, 48.33 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. As we think about where we are in this pandemic and the vaccines, we've moved from the science stage. Can the scientists figure this out? And the answer has been a resounding yes. Such extraordinary work done by many people around the world. Now we're down to the supply chain, the manufacturing, the distribution, getting it into people's arms, and that is going to be a challenge in and of itself. To help us kind of walk through that, we welcome Rich Fitzgerald. He's an executive at Allegheny County. He's located in Pittsburgh, Pennsylvania. Rich, thanks so much for joining us here. I understand that you you participated in the Moderna Phase 3 trial. Tell us a little bit about that.
I did. As county executive, we obviously run the health department for the second biggest county here in Pennsylvania, where Pittsburgh, Pennsylvania is located in. And back in the summer, our health department director, kind of asked me if I wanted to be part of a trial, a vaccine trial. And I'm not a medical person, so I was very, very reluctant, as you could imagine. But she kind of convinced me. And I have a wife who's a pharmacist, so that kind of helped me a little bit too. So I went through all the questionnaire. Do you have allergies? Do you have medical, what kind of medication, your age, who you're around, all that kind of stuff. I ended up getting the first shot back in September, early September. And then 4 weeks later, you're scheduled for the second shot. I didn't know, they don't tell you if you're getting the placebo or the vaccine, so you're in a blinded trial. But they did tell me before I got the second shot that I might get these certain symptoms, a little bit of a fever, a little bit of achiness, you might have a headache, etc. I did get the symptoms. They lasted about 12 hours. They were extremely mild, so I feel very fortunate. And then I find out, I guess it was in November, that the Moderna trial has turned out to be successful, and it was 97% or whatever the percentage was they have given. So I feel very fortunate at this point.
That's great news. I think one of the big issues, I'm sure you're aware, is convincing people that the vaccine is safe, it's efficient, it works, and that maybe some people in the past who were not supportive of vaccines, who were anti-vaxxers, to use a term, hopefully we can get those folks taking the vaccine. What are you doing in Allegheny County as it relates to that issue?
Well, we're trying to convince exactly what you're saying. There is a certain segment of society that I call them anti-vaxxers for any vaccine. But what we're trying to do is use what I'll call influencers. So in certain communities, the people that they're going to listen to, they might not necessarily listen to myself as county executive or the mayor or some CEO of a company, but maybe they'll listen to the minister of their church, or maybe they'll listen to one of the sports stars of the local team, that type of thing. A teacher that's very well respected. So we're trying to use people in the community who are again, I'll call them influencers, who can convince people that this is for your own good. This is the risk of not getting the vaccine far outweighs the risk that you might get with a little bit of a reaction with the vaccine.
So in your county, in Allegheny County, includes Pittsburgh, talk to us about the deployment of the vaccine. What do you know about your area, your county?
Well, I will tell you right now, we're frustrated because, and I was glad to see yesterday President-elect Biden come out and say that being critical of the current administration, to say he would invoke the Defense Production Act because I am not happy that right now it seems much more slowly being administered that we need to do. If we're going to get on the other side of this virus and get our economy opened up and get people healthy again and allow our seniors to visit their grandchildren, we have got to get this vaccine distributed quickly. So if we're talking what we've seen over the last 2 weeks, 1 million vaccines a week, it's going to take 7 years to vaccinate this country. That is unacceptable.
What is your understanding of how the distribution will in fact take place? Does it come from the federal government? Do you get an allocation from the manufacturer? How is it actually going to work?
We actually don't know, and I actually talked to the governor. It's supposed to go through the states, and I talked to the governor earlier today. Governor Wolf's been tremendous, and he's trying to get as much vaccine as he can to distribute here in Pennsylvania. Some of it is going directly from the manufacturer to the large healthcare facilities to do the frontline workers, and that certainly makes sense. Those are the folks that are exposed every day to patients, and they do need to be protected. The other route, if you will, is going through the big pharmaceutical companies to the nursing homes, the congregate care facilities, and I understand CVS and Walgreens and a couple of the big ones are doing that directly. And then some of it's going to the state departments of health directly. So then they will distribute it to counties like mine, Allegheny, and all the other counties and all the other municipalities here in the state. But it's not very clear right now what the federal government is doing. And again, I think it needs to be ramped up. It needs to be really, it's got to be priority number one, almost like we've done in wars. You think about back to World War II when, factories were turned into, for tanks and jeeps and planes, and we need to do the same thing. We are at war with a virus, and we need to put all of our resources into winning that war and defeating this virus.
So, Rich, about 30 seconds before the break, do you have an understanding as to when you may begin to receive some vaccines?
We have received very few, and I will tell you, we've received like 1,000 doses, which was really for our frontline workers. We run a jail, we run some nursing homes, we run some medical examiners and social workers that are out dealing with the homeless, dealing with people with COVID. So those folks that are in our employ, we were able to distribute the first shots within the last week. But that is woefully inadequate for all of the first responders we have in our municipalities, throughout the community, MedExpress, dental offices, doctors' offices, et cetera.
Hey, Rich, you're going to stick with us. We're going to do a couple bits of news, and then we'll come back and we'll talk a little bit more about the distribution at the local level, which you have such a good view at. Rich Fitzgerald, executive for Allegheny County, chatting with us from Pittsburgh, Pennsylvania. We'll have more with Mr. Fitzgerald coming up. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to continue our discussion with Rich Fitzgerald. He's executive at Allegheny County in Pennsylvania to get the ground level view of the effects of this pandemic and the distribution of the highly anticipated vaccines. But first, let's get a Bloomberg Business Flash with Charlie Pellet.
Hi, thank you very much. Here's what's going on. A couple of developing stories that we're following. Amazon acquiring podcasting company Wondery as the dominant audiobook purveyor moves to strengthen in another sound-based medium. Amazon shares trading lower now. Amazon down by 0.8%. Jill Soltau out at JCPenney. The retailer says it's launching a search for a new CEO who will be exiting the company tomorrow. Stocks higher, well off session highs, however. Small cap shares outperforming in the next to last trading session of 2020. The dollar's continuing its slide, weakening to the lowest in 2.5 years. Russell 2000 up now by 1.2%. The Dow up 69 at a record, up 0.2%. S&P also trading higher, up by 5, a gain there of almost 0.2%. Nasdaq up 35, a gain of 0.3%. 10-year up 3/32, 10-year yield 0.92%. Gold up 0.7%. $18.90 the ounce. West Texas Intermediate crude up 0.6%. $48.30 a barrel. AstraZeneca and the University of Oxford's COVID-19 vaccine has won UK clearance, marking its first approval worldwide for a shot that will be key to mass immunizations despite continuing questions over its efficacy. The U.S., meanwhile, is vaccinating an average of only 200,000 people a day against COVID-19. Many states have used just a small percentage of the shipments sent to them this month. Lauren Sowers, assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
Healthcare systems and state health departments are used to distributing and providing vaccine, but the pace of this and the unknowns of this and the cold chain storage issues around this vaccine, particularly the Pfizer one right now, are larger and more challenging than anything we've ever dealt with before.
And coming up in just a moment, we will have more on those distribution issues for the vaccines, all of the problems, all of the issues. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names, AstraZeneca up by 0.4%. Moderna shares, they are trading lower now by 2.6%. Pfizer is down 0.3%. Its partner BioNTech lower now by 2.5%. Recapping, U.S. stocks at records. S&P up 4 now, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. We are joined with Rich Fitzgerald, executive for Allegheny County. That's in Pennsylvania, home of one of my favorite towns, Pittsburgh. Have a lot of good memories from there. Rich, thanks so much for joining us again. You know, you got me thinking here as we think about getting the vaccine into people's arms. We think about back to March and April and May when there was a scramble across the country for PPE, and what we saw, because there was no federal control or federal policy, we saw states bidding against each other for masks and for other PPE. Are we seeing something similar here as it relates to trying to get access to these vaccines?
I certainly hope not. It's unclear again how the distribution channels and the numbers are going. Again, I'm glad to hear that President-elect Biden has talked about instituting the Defense Production Act as soon as he gets into office in a couple of weeks. And that's what's needed. I mean, there should be massive manufacture and production of this and then massive distribution, because until we get people vaccinated, you know, what they call community herd, community immunity, we're not going to see our economy open up. People aren't going to have confidence. They're not going to visit their family members. And it just needs to be priority number one.
So, Rich, give us a sense of how the pandemic kind of rolled through Allegheny County. Just give us a sense of kind of how you guys have been dealing with it.
we actually did very well with it early on through March, April, those early months. Our numbers were much lower than other places, similar-sized urban areas around the country. But then in late October, we really started to backslide, and really over the last couple months, it has been just almost a spike that we've never seen. We're going to have as many deaths, almost 500 deaths in the month of December, as we had through the first 9 months from March.
How are the hospitals holding up there? Because one of the things we saw here, certainly in the greater metro New York area, and then in other places around the country in the second wave, was the hospitals just get overwhelmed, and that's really when the problems start to occur.
Yeah, they haven't been overwhelmed yet, but we're reaching capacity, and that's another concern. Again, over the last 6 weeks or so, we have really seen a rise in not only hospitalizations, but ICU, acute care, and again, our fatality rate has gone up. And it is, through the Thanksgiving, and we don't know exactly what's happened yet through the Christmas holidays, but our test numbers have been extremely high, and our hospitalizations are very concerning. In Pittsburgh and Western Pennsylvania, you know a little bit about it. We've got a very robust UPMC, AHN, a very robust healthcare system, and even that is being taxed to the limit.
Talk about the economic impact that you've seen in 2020 as a result from this pandemic. Give us some of what you're seeing there, because we've seen obviously some very high unemployment numbers nationally. Jobless claims continue to be very weak. Yes, the stock market's going up, but that's not the economy.
No, and certainly people that are in the hospitality industry have been impacted more than anybody. We had a booming restaurant and foodie business in throughout, a lot of young people, a lot of vibrancy here in the Pittsburgh area, and those folks have just been impacted. The arts and cultural amenities, of which Pittsburgh has tremendous, the opera, the symphony, our sports teams, music, et cetera, have just been decimated. Things like construction and manufacturing and retail haven't been as affected as much, but it really has been the restaurants, the hotels, the entertainment venue that have just been disproportionately affected. They're the folks that really need the funding and the legislation that we need, Congress to go ahead and increase.
All right, Rich, before we let you go, are you a Steelers fan?
I am indeed. And
how are you guys feeling about it? Feeling pretty good?
Well, we're going to have a little kind of week off this week, so they're playing, but they're going to play a lot of the second-line players, and we're getting ready for that first playoff game a week from this weekend. And we'll have a few fans in Heinz Field, but if you've been around, you know that we wave those terrible towels, and we're excited. Hopefully, we'll be waving them at home without a lot of people and trying to stay safe. But we'll be rooting for our Steelers. Yes, indeed.
All right, Rich, thanks so much for joining us. We really appreciate your time. Rich Fitzgerald, he's an executive for Allegheny County. That includes Pittsburgh in the great Commonwealth of Pennsylvania. Some challenging times there like we're seeing on a national basis, but again, looking for that light at the end of the tunnel. Right now, let's head down to 99.1 Studios in D.C. for World and National Headlines with Nancy Lyons. Nancy.
Thanks, Paul. Prospects for boosting stimulus payments for most Americans to $2,000 are fading in the U.S. Senate, despite pressure by both President Donald Trump and congressional Democrats. Bloomberg's Irv Chapman reports from Washington.
Republican leader Mitch McConnell is combining the issue with a bill to meet other unrelated demands by the president. Democratic leader Chuck Schumer denounced the maneuver.
Senator McConnell knows very well how to make a bill a law, and he knows how to kill a bill. What we're seeing right now is Leader McConnell trying to kill the $2,000 checks desperately needed by so many American families by tying them to partisan provisions that have absolutely nothing to do with helping struggling families.
Schumer said the $2,000 would pass with 60 votes, including a number of Republicans, if it came to the floor without the excess baggage. In Washington, Irv Chapman, Bloomberg Radio.
At least 3 shipments of Moderna's COVID-19 vaccine showed up in Texas last week with signs that the shots had strayed from their required temperature range. The State Hospital Association there says that prompted a delay in in other deliveries. It's unclear how many doses were impacted overall. Moderna's vaccine needs to be kept frozen for shipment and storage. House Speaker Nancy Pelosi is expressing sadness about the death of an incoming member of the House. Pelosi extended sympathy to the family of Luke Letlow of Louisiana, who died from coronavirus complications. He was 41. Pelosi also noted how many Americans like Letlow have been killed by the virus, deaths that she says could have been avoided. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Charlie Pellet, let me ask you a question. Have you ever celebrated New Year's Eve at Times Square?
Yeah, I was going to ask you the very same question, and the answer is, let me just preface my answer by saying that New Yorkers have an interesting relationship with Times Square, which then begs the question: when you tune in and you watch on television New Year's Eve, who are all the people that are jam-packed in Times Square? However, I digress. You asked me a direct question: have I been there? The answer is yes. And to tell you how long ago, it must have been 81, 82, shortly after I arrived in New York City. And where did I watch it from? Was I up close? Absolutely not. Why? Too many people. I watched it from 56th Street and 7th Avenue. For people who are not in New York City, that is right adjacent to, very close to, Carnegie Hall. And basically, you've just got like a long shot 10-block view right down 7th Avenue. A long answer. Have I been there? Yes. Once. Once was plenty. How about you?
Your experience sounds very much like mine, probably 86, 87, from almost the same spot you were. At a party on the Upper West Side, hey, we'll walk down to see the ball drop. We got about as far as 56th or 57th Street. We had a great view, and we said, this is close enough. So it's a bucket list thing we can tick off, but once is enough. But that's probably a good thing. This year, it's going to be tough to see that, to get close. New York City Police, Charlie, are beefing up patrols and erecting blockades to prevent New Year's Eve revelers from descending on Times Square to witness the annual ball drop. The annual event, which typically draws more than 1 million people, is being closed to the public to avoid the risk of COVID-19 virus contagion. Sounds like smart.
It really does, given all of the issues that we have seen, including recent events in places like Nashville, but specifically because of COVID-19, makes absolute sense. Stay home, enjoy watching it, enjoy listening to it at home. Don't go to Times Square this year.
Yeah, I agree, and that's kind of our plan as well. But again, next year, presumably we're going to be on the other side of this, and the millions of people can crowd into Times Square and cheer in the beginning of a new year. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Next to last trading session of 2020, stocks do remain higher. Stocks do remain at records. Small cap shares, though, outperforming. Right now, the Russell 2000 up today by 1.1%. To put that in context, the S&P is up by 0.2%. S&P up 6 right now at a record 37.33. The Dow also at a record up 88, up 0.3%. Nasdaq up 31, up by 0.3%. 10-year up 3/30 seconds. 10-year yield 0.92%. Gold up 0.7, $18.90 the ounce, and crude up 0.6%. West Texas Intermediate 48.30 a barrel. Recapping stocks moving higher at records. S&P up 6, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate it. Well, as we think back to the beginning of this pandemic, one of the images that we have is cruise ships stranded at sea, ports not willing to take the people where there had been the virus on the ship. Eventually, over a long period of time, most of the passengers got off the ship, got home safely. But how about the people, the crew, the people on the ship that work on the ship? What was life like for them? How has it been for them? There's a fascinating story in the Bloomberg Business Week this week that goes to that issue. Let's bring in Joel Weber. He's the editor of Bloomberg Business Week on the remote access line from Brooklyn. And Austin Carr, technology reporter for Bloomberg News. He's on the phone from L.A. Joel, this is just a compelling story, a sad story. Talk to us about it.
Yeah, it is. It's really a tragic one. And the magazine has done, I think, just a seminal job of covering the cruise industry's 2020, which obviously was a really bad story, especially earlier in the year. And those stories have largely centered on passengers and the corporate experience. What happened when one of the ships in Australia actually let its passengers off, and the pandemic basically entered Australia. But Austin, I think, in this story is bookends all of it with this incredible human story that largely untold of what it was like to be a crew member on these ships. And it's a tragic story because of the suicides that basically happened. And I'll turn that over to Austin because it was just an incredible reporting feat, but also I think was just an incredible service, because these are people who, when passengers left, like you said, Paul, the crew members actually were stranded and spent weeks basically still on lockdown. So Austin, take us inside your reporting. How did you first learn about the topic, and where did it take you?
Yeah, in many ways, these were sort of the forgotten workers of the COVID-19 crisis that hit the cruise industry. You had, Joel, as you noted, we did a lot of reporting on a lot of the passenger tragedies and how the corporations have been hit. But tens of thousands of workers, if not more, were stuck at sea long after passengers left. And what we had started exploring was just what the conditions were like aboard these ships. Crew members told us that they were left with profound uncertainty around when they were going to get home. Their pay was eventually cut off when they were moved off duty because there was not really any work to do aboard these ships. They were confined to small cabins due to the pandemic. And they, anytime they were let outside, it was under very regimented circumstances, specific times when they could go get meals, when they could go have a cigarette break, when they could go get fresh air. And the only connection they had to the outside world was through a very mediocre internet connection, which they could use to Facebook or WhatsApp with family and friends. And so one of the things we wanted to do was get beyond sort of the ancillary effects of the pandemic, which is there were already, thousands of infections and, around 100 or so deaths stemming from COVID-19. But we wanted to zero in on the consequences of people being confined to this extended period of isolation, which in many cases resulted in depression, isolation, anxiety, and unfortunately suicide, as we sort of explore in the story.
Austin, I was wondering, as I was reading the story, who was representing, or who was supposed to be representing the interests of these workers?
In many cases, there are unions advocating on their behalf. But let's be clear, these are lower paid workers, often from poor countries. There was often a lot of attention on passengers because they were the ones speaking to Western reporters. They were sharing photos and videos from inside these cruise ships for the limited time they were on there. You got to think that a lot of these passengers were very affected for just being on these ships for maybe a couple weeks, whereas these crew members were aboard for months on end. And I think the ultimate issue is there wasn't a lot of people advocating on their behalf. In certain instances on these ships, we did see protests break out to bring attention to their plight. On several Royal Caribbean ships, we saw a hunger strike staged for crew members to sort of put pressure on the company to get them home. There was a protest on another Royal Caribbean ship where they raised a banner that essentially said, "How many more suicides do you need?" Calling attention from the press to apply pressure and scrutiny of these cruise industry players to sort of get them home. But I think ultimately, to your point, there isn't a lot of people advocating beyond unions and sort of press, but there definitely needs to be more attention to this issue, considering the conditions they faced for extended, prolonged periods at sea.
Austin, there's some really interesting characters in the story, including Joseph Soller is really the main story that you use as the vehicle to talk about the trend. Can you tell us about him and his family and sort of where their fight to basically have his story talked about more broadly currently stands?
So Joseph was a cruise ship worker. He'd been working for Carnival cruise ships since essentially January, and he really epitomizes what a lot of these crew members went through. When the pandemic sort of exploded in March, he was moved around to several ships. He was isolated in the cabin without a window for a certain period of time. Friends of his said that just to go outside, there would be specific times that you might only have an hour for breakfast, but it could take 45 minutes just to get a coffee because the sort of food service lines were so understaffed and the ships were so crowded. And unfortunately, after months at sea, he did end up taking his own life. Crew members reported not having seen him for several days. He missed the daily required temperature checks, and crew members were sent to check on him. And unfortunately, he was found hanged to death in what is a very tragic story that we outline in the story. And ultimately, we trace what it's actually like for the family to learn of this news and go through the process of repatriating their son's deceased body and his remains, and to go through the process of having him declared dead when he died in international waters, to sort of figure out the sort of true story of what happened to their son, when it's very difficult to get information out of these cruise companies who are not often totally forthcoming about information for a variety of reasons. And so this story is both the story of a lot of crew members getting home and dealing with mental health issues, but also zeroing in on ones who suffered this ultimate tragedy of suicide and how the families have had to deal with the consequences of this difficult repatriation.
Yeah. Hey, Austin, thank you so much for bringing this story to our attention. And of course, if you are someone you know is having suicidal thoughts, the National Suicide Prevention Hotline is 1-800-273-8255. Austin Carr, technology reporter for Bloomberg News, on the phone line from LA, and Joel Weber, editor, Bloomberg Business Week, on the remote access line from Brooklyn. For those of you listening in New York, DC, and San Francisco, and watching on YouTube, Bloomberg Business Week continues. If you're listening on 106.1 Bloomberg in Boston, Bay State Business is next. We will drive the conversation forward. We have green on the screen here on this New Year's Eve. The story seems to be the stimulus. It's passed. Now it's the vaccines. We need to get the vaccines into more arms at a faster rate. That seems to be the story of the day. We will have more coming up. This is Bloomberg.
World Hinkwaters. I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, December 30th. We've got 60 minutes to go in the next to last session of 2020. Stocks are higher. Stocks are at records. Small cap shares outperforming. Right now, the Russell 2000 is up by 1%, bringing its year-to-date gain to 18.6%. To put that 1% gain today in perspective, the S&P is now up by 0.1%, higher by 5. Looking at a record right now for the S&P, the Dow's up 74, up 0.3%. NASDAQ is up 27. For NASDAQ, that is a gain of 0.2%. 10 years up 3/32, 10-year yield 0.92%. Gold up $11 the ounce, higher by 0.6% at $18.90. West Texas Intermediate crude up 0.6%, $48.29 for a barrel of West Texas Intermediate crude. Changes to the Federal Reserve's interest rate setting panel will make the U.S. Central Bank even less likely to tighten monetary policy in the new year, no matter how much of a jolt the economy gets from the rollout of COVID-19 vaccines. As for what we are likely to see from the Fed and the outlook for interest rates next year, Jim Bianco is the president of Bianco Research, and he was interviewed this morning on Bloomberg Television and Radio.
Interest rates rising is neither good nor bad. It depends on why they're rising. Typically, they rise because nominal growth is going up. Okay, nominal is real plus inflation. If they're going to go to 150 to 2% because we're going to have booming real growth, that's actually a good thing, and it'll probably turn out to be a good year for the stock market. But if they're going to go to 150 or 2% because we're going to have a resurgence of inflation, and that will be problematic for risk assets like the stock market.
10-year yield right now, 0.92%. Southwest Airlines is seen as the #1 carrier to take advantage of the eventual recovery in travel demand. This according to Raymond James, citing a call with Brent Snyder, president of Cranky Flyer. Now, Southwest has added 12 new cities during the current crisis. Southwest Airlines shares, they're up today by 0.4%. Among some of the other airline names, UAL up 1.1%, American up by 1%. And that's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Well, during this pandemic, I think most of us have become, or we think we are, experts in buying stuff online, and maybe a lot more stuff, at different types of stuff than we did pre-pandemic. And the proof is in the pudding when you look outside anybody's door. There seems to be boxes piling up on a daily basis from all over. Let's get a sense of how this infrastructure, this e-commerce trend is playing out. We can do that with James Thompson. He's a partner at Buy Box Experts. Prior, he was former business head of Amazon Services. He joins us on the phone from Seattle. So, James, boy, it just seems like this pandemic has pulled forward e-commerce trends and penetration rates by, a couple, 3 years. What do you make of it?
I think it's exciting. It's very exciting, but it's also forcing brands and retailers to ask themselves the question around how are they going to adapt quickly to remain where customers want to buy products. One of the scary things that's happened for a lot of companies this year is they realized we're not actually set up to help customers if they want to buy online. So the questions around what does it take to make that transition and be in a position where you can support customers whether they want to buy in store or buy online, that's going to be the story of 2021. Companies making those adjustments, making those investments, and getting themselves ready for a world where enough consumers are interested in buying online that retailers and brands alike need to be ready.
Yeah, I'd be shocked if a company I was invested in said they didn't have a digital strategy. I'd be a seller of that stock. I don't care what business they're in. What are you finding in terms of kind of the headaches are for retailers here as so much of their business has moved online? What are some of the things that they're finding problematic?
There's at least a couple of big issues for most retailers. Number one, companies are not set up to have real-time inventory information available across not just in store, but across the country. If a customer places an order online and the inventory is sitting in a local store, does the retailer know that, or are they drawing inventory from an online fulfillment facility that has dedicated inventory just for the online customer? There was so much inventory tied up in physical stores over the first few months of COVID, but you couldn't access it easily. And so for all intents and purposes, that's dead inventory. So as retailers start thinking about how do they make information about inventory available so that a customer can access it, whether they're in store or whether they're buying online, those types of questions are big, complicated questions that require software investments, but also a change in philosophy. For a lot of retailers, the e-commerce department is a separate company or a separate entity that has its own set of goals. And so you look at how much are we selling in the store versus how much are we selling online. From a customer's perspective, they don't really care how the accounting works. They just want to know that they can go into a store. If it's not available in the store, no problem. We know exactly where it is, and we'll get it sent to you so you can have it. I think of stores or brands like Lego, a nice vertically integrated company where it doesn't matter whether you're an online customer or a physical in-store customer. It's all one entity. You can buy in one channel, you can return in another. If you go into one channel and try to buy the product and it's not available, no problem. We can service it from other channels. That kind of model is the model that I think most retailers are going to have to move towards fairly quickly so that they don't lose customers to retailers that have got this part figured out.
And that's the omni-channel strategy, right, James?
Yeah, it's more than just omni-channel. Omni-channel for some companies means, hey, we sell in multiple channels. Well, a real omni-channel strategy says we sell in multiple channels and we know how to move inventory back and forth between those channels. We know how to make it a fluid experience so consumers don't have to worry about where the product's actually sitting today. It'll arrive to the consumer quickly, whether that's in the store or whether it's to their doorstep at their home, wherever they choose to have it shipped. So that's issue number one. The other big transition for companies is going to be around how do you control last mile delivery? If you look at what's happened with the massive growth in demand for online orders in the past 6-7 months, most retailers rely on the Postal Service, UPS, and FedEx to get those packages delivered to consumers. Well, those carriers haven't been able to keep up with the increase in demand, and so that's created a lot of delays both in getting products into warehouses, but also getting products from warehouses delivered to consumers. When I look at what happened, for example, with Costco, back in November, the CEO was already saying to consumers, hey, UPS is slow in picking up our packages and getting it to consumers. You need to go and download the UPS app to figure out when you're actually going to get the shipment. Well, that kind of situation was seen across many retailers where they relied on these carriers to get the packages to consumers, but quite frankly, it was a black box as to when it was actually going to be received by the consumer. That's not a good experience for consumers. And quite frankly, consumers are going to go looking for retailers that can make a promise around when a product's going to be delivered and they can actually deliver on it. And that's hard for most retailers to do when they don't control the last mile distribution themselves.
Hey, James, I'm guessing, that the share of e-commerce has just really accelerated here, the share shift. There's no going back, is there?
Well, I think consumers still want to do shopping, but when it comes to buying, that is to say, when you know what it is you want to buy, yeah, going online, you get it done quickly, no problem. Consumers will return to malls when it's safe to do so, but they'll be doing that more to learn about products and to be buying things that they may not otherwise have initially planned to buy. And that's okay. That's great. For a brand or a retailer that has both a physical presence in malls as well as an online presence, they need to be prepared to operate physical stores where the same store sales may not necessarily continue to increase because consumers are going in to learn about products, but because of product availability issues, consumers may end up buying the products through the online portion of the business. So there's a role for both online and for inline, but it's going to be much more obvious within 6 to 8 months when we're back at physically visiting physical locations.
Right.
It's going to become more apparent as to what the relative role is of each of these different types of channels.
Hey, James, you're going to stick around. We're going to do some news, but I've got a lot more questions, particularly as it relates to the logistics of getting these ever-increasing number of boxes from point A to point B. I'm seeing lots of different strategies out there. I want to chat with you about that. James Thompson, he's partner at Buy Box Experts. He's former business head of Amazon Services. He's on the phone from Seattle. We'll come back to him and get into some of the details of how you get these boxes all around. Right now, let's head down to 99.1 Studios in Washington, D.C. for World and National News with Nancy Lyons. Nancy.
Thanks, Paul. President Trump is repeating his calls for more money in stimulus checks, tweeting today, quote, $2,000 ASAP. Senate Minority Leader Chuck Schumer is calling out Senate Majority Leader Mitch McConnell for refusing to bring a standalone measure for $2,000 checks to the Senate floor. Schumer says he's certain it would pass.
The quickest, best, and right now, before January 3rd, only way to get it done is to put the House-passed bill on the floor, get 60 votes, and send it to the president, who will obviously sign it.
McConnell has introduced a bill to raise the checks to $2,000, but it also calls for a repeal of legal protections for Internet platforms and would create a commission to study election issues. Many say by adding those provisions, it's basically a poison pill that torpedoes those $2,000 payments. Well, there are new safety measures in place for the nation's railroads. Bloomberg's Ann Cates reports.
Just days before a deadline, transportation officials say an automatic train braking system is in place to prevent major and sometimes fatal crashes. The Federal Railroad Administration now has positive train controls in operation on more than 57,000 miles of the nation's railroads. The system slows trains that are exceeding the speed limit and prevents them from going down the wrong track. In Washington, I'm Ann Cates, Bloomberg Radio.
Britain's House of Commons has voted resoundingly to approve a trade deal with the European Union, paving the way for an orderly break with the bloc that will finally complete the UK's years-long Brexit journey. With just a day to spare, lawmakers voted 521 to 73 today to approve the agreement that was sealed last week. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Well, Charlie, one of our most read stories on the Bloomberg today is about the hedge fund business. Turns out the hedge fund industry's swashbucklers haven't been made obsolete by the machines just yet. After years of being outgunned and outclassed by computer-driven quantitative strategies, human stock pickers climbed back on top in 2020, helped by aggressive bets in technology and the flood of central bank money that buoyed markets. So the stock picker had a pretty good year in 2020 in what was a generally good year for everybody, but nice to see the actives do well, Charlie.
Indeed, and I was struck by the story. Perhaps worth backing up, Paul, and just explaining what these quant funds do. They involve data inputs. The goal is to minimize human touch, not exclude, but the goal is to minimize. But as I was struck reading this story by our reporters, a couple of phrases that jumped out at me, referring to the reasons behind what happened to a lot of the quant funds. Their trading, quote, their trading models were thrown off by swings their computers had never seen before. So I suppose we can cut the quants some slack there. And also, the other phrase that I saw a little further down in our Bloomberg News story was, quote, whether by luck or skill, referring to the people who actually got involved in running hedge funds or long funds that saw substantial gains beating some of the quants.
Yeah, it's really interesting. I think what we've seen in just institutional hedge fund business is some of those big quant-driven funds, as you were mentioning, they kind of look for mispricings between certain asset classes, and then they just rip off these rapid-fire trades, and they've generally been outperforming some of the more active bottoms-up fundamental stock pickers. But this year was so unusual, Charlie. Some of those experienced stock pickers, I think, really performed very well and showed that there's still value in that type of strategy.
Indeed, and also worth pointing out a little further down in our story, it says the computer models for the quants relied on finding patterns in historical data, and many had never encountered a once-in-a-century pandemic.
Yeah, I can relate. I think we all can relate to that once in a century.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing sports story. Governor Cuomo says 6,700 fans will be allowed at the Bills playoff game in New York. Stocks higher, holding on to gains. We've got roughly 43 minutes to go ahead of the closing bell. We are looking at records, but let's head right over to the First Word breaking news desk for today's afternoon call. Here she is, Kriti Gupta.
Thanks, Charlie. Good afternoon. Stocks trading higher ahead of the close. Dow's up 77 points, the S&P up 4, the NASDAQ up 11, U.S. 10-year yield at 92 basis points, and gold trading higher by 11. The VIX at a 23 handle with WTI crude futures up 0.6% on the day. Small caps in on the rally, up 1% with 9 out of the main 11 S&P 500 sectors trading higher. That price action led by gains in energy and material stocks, with consumer, staples, and telecom leading on the downside. NASDAQ biotechs rising 21 points, transports gaining 25, and semis up 41. Looking under the hood of the S&P 500, Tesla and MasterCard leading gains in the S&P 500, with Apple and Microsoft dropping, wrapping things up. That risk sentiment turning cross-asset investment-grade spreads at their lowest since February, and even EM equities at their highest since 2007. Live from the First Word breaking news desk, I'm Kriti Gupta, filling in for Bill Maloney. Charlie?
All right, thank you very much, Kriti. And got to mention Bitcoin heading for 29,000, biggest monthly gain there since 2019. To hear live breaking news over your Bloomberg Type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Let's get back to our discussion of e-commerce and the logistics thereof. James Thompson, partner, Buy Box Experts, also former business head of Amazon Services. He joins us on the phone from Seattle. James, I was thinking back to before Christmas, probably late November, early December, getting into the busy season. Outside the UPS store in my town, the UPS guy was loading a truck, but it wasn't a brown UPS truck. It was an Avis truck. And he was telling me the reason he was doing that is because they ran out of UPS trucks. Are these companies, are they not able to keep up with this e-commerce growth we're seeing nationally?
Every Q4, each of these shipping companies will often find additional trucks to be able to help with some of that.
James, let me clear that up. I can say one more thing. I asked him about that, and he said, usually we just have to go to these backup trucks during the holiday season, but we've been doing it all year since March.
Well, back to something I said at the first part of our discussion, these companies, Postal Service, UPS, FedEx, they haven't been able to grow as fast as needed to support all the extra demand. And so they're growing as fast as they can, hiring people as fast as they can, grabbing trucks from here and there as fast as they can, but it's still nowhere near enough. And so as we start to think about what's going to happen in the next year, if all this incremental e-commerce demand is here to stay, these companies have to make a very important decision around, are they prepared to invest in growth to keep up with this? If you look at what's happening with Amazon made the decision over 3 years ago and said, we can see the future, and the future doesn't look good if we're relying on companies like UPS and FedEx and the Postal Service to grow with us. And so companies like Amazon have made significant investments themselves in last mile capabilities. Target bought Shipt earlier this year because they too see that they need to own some of the last mile logistics. These are very important decisions and very forward looking in terms of if consumers are going to be making more and more purchases online, and last mile logistics is being outsourced to somebody else, that's not a good situation if, in fact, e-commerce grows faster than these logistics companies can support. So when you look at what's happened with Amazon in Q4, I've seen estimates that suggest that on prime orders that Amazon was shipping here in the U.S., they were actually handling upwards of 75% of all of the orders themselves, getting it from the Amazon fulfillment centers onto trucks or planes that they control, onto trucks in your local city, delivering it to your home. 75% of orders. That's capacity that UPS and, not FedEx, because Amazon doesn't work with FedEx, but UPS and the Postal Service, that's capacity that they weren't being asked to support because Amazon said, we can't deliver on our prime promise if we rely on companies that aren't growing fast enough and don't have enough capacity to support us.
And James, that brings up a good point. When you go out on the highways and byways, I'm just shocked at the number of Amazon trucks, you know, the big 18-wheelers all the way down to the smaller vans for the last mile. Literally, it seems like, you know, Amazon has become the nation's largest trucking company.
So they currently have over 30,000 transport trucks on the road that they own. And when you drive up and down the East Coast corridor and you look at who's actually on the road and you start counting Amazon trucks versus UPS trucks, you'll find that there's probably 10 to 12 times as many Amazon trucks as you'll see UPS trucks. And that's Amazon saying, we're going to control moving products from warehouses to sorting facilities and ultimately to consumers' homes. We can't rely on someone else to be able to manage this. So Amazon's putting a lot of pressure, not just on being able to buy trucks and so on, but also on labor that's going to support all the movement of these products. Amazon continues to rent more and more planes for their own prime air capabilities. Again, moving full cargo planes back and forth, rather than saying we're going to rely on cargo space that we can use on passenger flights that pretty much have, dropped off significantly this year.
Yeah.
We're not going to rely on that. We're just going to have our own planes that we can fill, thank you very much, and fly between big hubs, ensuring the product can move quickly. At the end of the day, Amazon's number one focus is how do we continue to grow while still delivering on this prime promise? Just because there's twice as many customers that want our products doesn't mean that we have to slow down on being able to get customers their packages quickly. Amazon has not been able to grow as quickly as they want, and so the prime promise has slipped a little bit from 2 days to 3, 4, 5 days, depending on where you were in Q4. But you know, Amazon's going to keep making those investments because they can see that the other logistics companies are not going to be able to grow in line with what Amazon needs.
Hey, James, we have about 30 seconds left. I'd love to get your thoughts on the grocery business for Amazon. Is there a future there?
The grocery business doesn't need to be profitable for Amazon. The grocery business is really about Amazon continuing to engage with consumers and keep Amazon top of mind. If you think of your wallet as having 10 different types of purchases you have to make each week, at least a couple of those are grocery related.
Yep.
And Amazon needs to continue to be relevant in all parts of your wallet.
And they certainly are, judging by my credit card bill. James Thompson, partner, Buy Box Experts, also a former business head of Amazon Services. We appreciate your thoughts. He was joined us on the phone from Seattle, giving us the latest on Amazon as you think about it. Again, you go out on the highways and byways, and I'm just struck by how many trucks we are seeing from Amazon. Amazon-owned and branded trucks. They're just everywhere. So they are taking matters into their own hands. We'll have more coming up. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to take a look at the vaccines, or the lack of pace, or the disappointing pace of the vaccines relative to some of the initial ambitious goals that were set out. And that's a timely story, given that a redhead just crossing the tape here that Charlie, I know we'll get to, a very, very bad case number for New York. But let's go to Charlie Pellet right now for Bloomberg.
Thank you very much. And here's what's going on, Paul Sweeney. New daily high, New York reporting 13,422 new virus cases. Again, that is a new daily high. Stocks holding on to gains. We've got just about 28 minutes to go ahead of the closing bell. Next to last trading session of 2020, S&P's up 5 right now. That is a gain of just about 0.2%. We are on track for a record close here for the S&P. The Dow up 91, also looking at a record up 0.3%. NASDAQ is up 22. That is a gain of about 0.2%. 10-year up 430 seconds. 10-year yield 0.92%. Gold up $13 the ounce now, up 0.7% to $18.91, and crude is up 0.7%. West Texas Intermediate crude 48.33 a barrel. AstraZeneca and the University of Oxford's COVID-19 vaccine have won UK clearance, marking the first approval worldwide for a shot that will be key to mass immunizations, despite continuing questions over its efficacy. The AstraZeneca vaccine will have fewer storage issues, and that is a welcome development for Lauren Sauer, assistant professor of emergency medicine at the Johns Hopkins Bloomberg School of Public Health.
And I think that will be huge, not just in the U.S., but globally, where cold chain can be a real challenge. So I think we're excited to see, we saw the reduction in the challenges with Moderna, and we'll continue to see that in some of these other vaccines that are coming down the pike. It'll be really important for getting vaccines ramped up broadly across the globe.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names today, AstraZeneca up by 0.7%. Moderna is down 3.9%. Pfizer down 0.6%. And BioNTech lower by 5.7%. Again, repeating our top story, New York reporting 13,422 new virus cases. That is a new daily high. And finally, Dawn Wells, who played the wholesome Marianne among a misfit band of shipwrecked castaways on the 1960s sitcom Gilligan's Island, died today of causes related to COVID-19. She was 82. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Well, when we started getting the good news on the vaccine front, one of the numbers that kind of stuck in my head was 20 million people would get the vaccine by the end of 2020. It looks like we're going to be woefully short of that number. Let's dive into kind of what's driving those issues. Drew Armstrong, he's a team leader for U.S. healthcare for Bloomberg News. He joins us on the phone from Atlanta. So, Drew, there's a story on the terminal today. Vaccinations are running at about $200,000 a day, but that's far short of what Warp Speed promised. What's going on?
Yeah, so about 200,000 vaccinations being done a day. I think right now we're seeing the combined effects of some vaccines that have rather complex logistics to ship, store, and then administer. The early start to this that is still very focused on the group of frontline health providers and folks who reside in long-term and work in long-term care homes or nursing homes. And, you know, frankly, just not quite as fast as expected in the readiness that's needed to do the type of mass vaccination that, is being called for here. I think, right now the U.S. pace is somewhere around 200,000 vaccinations a day. What you really should be seeing to reach 20 million is close to 1 million a day on average since the since the authorization of the Pfizer vaccine, and it's just nowhere close to that.
Drew, we earlier in the show we were speaking to the county executive for Allegheny County in Pennsylvania. That includes Pittsburgh, and he was extraordinarily frustrated on the lack of coordination and information from the federal government. What role, in theory, should the federal government be doing here to help with the distribution of these vaccines?
I think that's a fantastically good question. One of the things that we have seen is that a number of holdups in funding for the CDC that was meant to be dispersed to states to help them with exactly that. Some of that has rolled out over the last 2 weeks, but the new stimulus bill and economic relief bill contains about $8 billion in CDC funding, the majority of which is going to go to the states, and probably not a moment too late, not a moment too soon. There's a real debate about what is the federal government's role here. I think you will see the Biden administration probably try to take a much more active role in assisting states and communicating from above what's going on here. President Trump earlier today and late last night, facing some of the news headlines crossing that this rollout was not going as fast as expected, basically said, it's the state's deal. It's up to them to go and do this. He was very, very clear about the fact that we shipped you the vaccines and go and get this done on your own. So I think that you clearly see a dispute about who should be leading this effort, and the consequences of that are the number of people who are being vaccinated being rather low.
So, Drew, President Biden yesterday in a pandemic comment said 100 million people will get the vaccination in the first 100 days of his administration. As you talk to folks in the healthcare industry and the supply chain, is that doable?
I think it's a really good question. Right now, you are seeing vaccination points are essentially in hospitals and increasingly in nursing homes and long-term care settings. Those are, institutional settings where presumably it is relatively easy to line people up because they all work there or live there and say, okay, we're going to do your vaccination. It's also a very small group. Where this is going to start getting bigger is when you bring on vaccinations at workplaces, at pharmacies around the country, and you really, really expand that and use the tens of thousands of potential vaccination sites in the same way that we do with testing. I mean, remember, we can perform a huge volume of testing in this country right now using a distributed healthcare network. It's very easy to imagine if you replace the vaccination infrastructure on top of what you see in the testing network, you can do certainly a lot of vaccination. But right now, it is just not happening, and it remains to be seen what the next couple of weeks hold.
Hey, Drew, maybe 30 seconds. Where is the bottleneck? Have we identified the bottleneck in this process?
I think right now, no, and the bottleneck is probably about 5 different little bottlenecks. Complaints by some states they're not getting enough, others that they're not moving fast enough. It's a really, really complex situation, which is probably part of the problem, that complexity.
Hey, Drew, thanks so much again for your reporting. We appreciate it. Drew Armstrong, team leader for U.S. Healthcare at Bloomberg News, joining us on the phone from Atlanta. Again, the issue now is it's moved from science, now it's moved to supply chain management, getting these vaccines into the arms of Americans as quickly and as efficiently and as fairly as possible. Well, we knew there was going to be some bumps in the road, and that's apparently kind of what we're seeing right now in some of these early days. Right now, let's head on down to Washington, D.C., our 99.1 studios for world and national news. We can do that with Nancy Lyons. Nancy.
Thanks, Paul. Campaigns and outside groups are making a final push to turn out election-weary Georgians whose votes will determine control of the U.S. Senate. National pollster Frank Luntz tells Bloomberg turnout is especially high in the urban areas of the state, and President Trump may need to do more campaigning than currently on his schedule.
Only doing 2 appearances, that's not enough, quite frankly. At this point, with 5 days to go, I think the Democrats have a narrow advantage. And if the election were held right now, if you just close it off, the Democrats would win both of those Senate seats.
Republican Senator Josh Hawley says he will challenge the presidential election results in the certification of the Electoral College vote in the Senate next week. Biden Press Secretary Jen Psaki addressed that today during a transition briefing.
Regardless of whatever antics anyone is up to on January 6th, President-elect Biden will be sworn in on the 20th.
The president-elect plans to nominate former Pentagon official Kathleen Hicks to serve as the first female Deputy Defense Secretary. He says he wants someone who knows the department inside and out to help restore order to the agency. House Speaker Nancy Pelosi is expressing her sadness about the death of a Louisiana congressman-to-be. She extends sympathy to the family of Luke Letlow.
We're so sad. 41 years old, coronavirus, blood clot, complication. Could happen to anyone.
New York today posted a new daily high for coronavirus cases at 13,422. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Charlie, an interesting story out of California, a Bloomberg News story. California Governor Gavin Newsom said he'll ask lawmakers for an immediate $2 billion to help schools open safely for in-person instruction by early spring, even as a surge of COVID-19 cases overwhelms healthcare facilities in the most populous U.S. states. So trying to get the educational system moving forward at a faster pace, Charlie.
Indeed, and it's an incredibly important story because California is certainly one of the world's largest economies. If you can't get parents back into office buildings because they've got to stay home with the kids, that's going to affect productivity. And you talk to anybody who wants to return from work, who is working from home, one of your top considerations is who takes care of the kids, where do they go? Online learning may not be working for a lot of people, especially younger kids. That's one of Governor Newsom's priorities, to get the kids back in classrooms. It is, however, a $2 billion plan. A lot of questions, too, as to whether California can afford it, but I would suggest California has no choice.
Has no choice. You know, some of the numbers here, just in terms of, it's California, as you mentioned, you know, one of the world's largest economies, but you just kind of look at some of the numbers here. They have more than 5,800 public elementary schools throughout the state, almost 3 million students enrolled, just amazing. The Los Angeles Unified School District is the nation's second largest after New York City. So this is clearly a huge lift on the part of the state and on the part of the governor. But as you mentioned, it's an investment that, you know, you could make so much arguments is sorely needed.
Indeed, and also, too, that money going to weekly testing for communities with high rates of transmission, masks for all students and staff, improved contract tracing, and the prioritization of school workers for vaccinations. But these things all cost money, but these things are all absolutely necessary if you're going to not only reopen schools, but if you're going to reopen the economy.
Absolutely, Charlie. And some of the numbers there on the pandemic are very difficult. The state has been averaging more than 40,000 new daily cases over the past 2 weeks, and its average rate of positive rates has climbed to 12.5%. That's up from 2.5% in October.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is getting down to the wire. We've got just 13 minutes to go ahead of the closing bell. 13 minutes left in the next last trading session of 2020. The Dow, the S&P, NASDAQ, they're all pushing higher. We are looking at records right now. Got to stay with Bloomberg Radio to see where we close and, of course, how Asian markets react tonight. S&P up now by 6 points. That is a gain of about 0.2%. The S&P for the year up 15.55%. Who would have thought back in March and April? The Dow up 99 right now, a gain of 0.3%. NASDAQ up 23. That is a gain of about 0.2%. Again, records there for the Dow, the S&P, and NASDAQ. The Russell 2000, small caps the standout again today. The Russell 2000 up 1.1%. The 10-year up 3/32, 10-year yield 0.92%. Gold up $13 the ounce, higher by 0.7% at $18.91. And crude up 0.6%. West Texas Intermediate up 30 cents a barrel, 48.30. Stocks climbing, small cap shares outperforming in the next to last trading session of 2020. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, let's talk ETFs. This is just an extraordinary story that just keeps on going. The growth in this space is something I haven't seen very frequently in my 30-year career. Let's get an update. We can do that with Ed Rosenberg. He's head of exchange-traded funds at American Century Investments. These guys are big, $210 billion under management. He joins us on the phone from Chicago. Ed, thanks so much for joining us here. I always love to start talking about ETFs to get the latest on fund flows into ETF. Did the pandemic 2020 year, did that kind of put any kind of, did that disrupt the fund flow story that we've seen in ETFs?
So thank you for having me. And no, it really didn't. I mean, this year, 2020, has been an amazing and interesting year all around. And as most people want to put it to bed, but in the ETF industry, flows are near record highs. I mean, 2017 was the record year for $476 billion in flows, and we're right there before we get to year end. We're approaching, we might even be passing that. Last numbers I pulled were right before Christmas, and we're at 458. I've seen some things that say we're getting closer to about 500 billion in flows for a record year. So ETFs have not been affected. What has been affected was where the money's going, which has changed several times throughout the year. But overall, the money just keeps going into ETFs.
All right. And give us the reasons why, for those of us that that grew up in the mutual fund world and would have to go see American Century, the fund managers there and the fund managers at Fidelity when I was a sell-side analyst. Tell us about the relative merits of an ETF versus, say, a mutual fund.
Yeah, absolutely. And remember, I grew up on the mutual fund side as well back in the day. So, I mean, if you think of what an ETF offers, right, the first and the biggest thing is flexibility. So, when you looked at those days in March where the markets were going down or maybe they were bouncing around, with an ETF, you can choose your time of day. You can't do that with a mutual fund. It's always going to be the 4 o'clock close, no matter what time you call it in. So that's one aspect. The other aspect with ETFs is there's the potential to be much more tax efficient. While I think, and I don't have the numbers exactly for mutual funds and how many pay capital gains, let's say it's about 60% of all equity mutual funds pay a capital gain, whereas if you look at ETFs, the number's below 10%. And so ETFs are more tax efficient in the long term for investors. And then the other thing that's historically been there is ETFs tend to be a little bit more price sensitive, so they tend to be a little cheaper in times. You'll see some of the newer ETFs that are coming out, especially the active ones, on par if there's mutual fund counterparts, but even some of those are a few basis points cheaper. So there can be a cost savings with ETFs as well. And I think those 3 points have led ETFs just to become within the last couple years, more favored as a structure and a wrapper for people because it creates flexibility that they just didn't have before.
Ed, are these primarily retail-oriented? Is this a retail-oriented product versus institutionals buying into this?
Not at all. I mean, I think depending on the product type you look at, I think a lot of the institutions have gravitated towards ETFs and the basic indexes because it's something, whether you're a pension or whether, you're any other type of institution, you manage towards a benchmark. And if you can find an ETF relatively cheaply that is tied to that benchmark, why wouldn't you use it?
Right. What types of, well, first of all, how many ETFs are there out there, roughly?
So I'm going to give you a rough estimate. There's around 2,500 ETFs in the U.S. today. And I know that number seems big, but if you compare it to the number of mutual funds, you're talking about 8,600 mutual funds. So it's still much smaller.
And what are some of the types of ETFs that are being launched these days? Presumably all this fresh capital coming into the sector, I'm guessing just that provides incentives for different types of ETFs to be created.
Yeah, it does. 2020 has been the most interesting year in ETFs, and I've been in ETFs for the last 15 years. And what makes it so interesting is we saw this was the first time that active launches, active ETFs outpaced index ETFs. If you think of what ETFs have been known for, they've always been known as index products.
Yep.
And that tide has shifted dramatically in 2020. The other thing that we saw this year was the advent of the first, what we call semi-transparent. I know some of your colleagues at Bloomberg call them ANTs, active non-transparent ETFs. Yep. And they were passed by the SEC in late 2019, and they launched in 2020. And there's been 5 different types of those that launched this year where they don't disclose the holdings every day. And those ETFs alone are pushing about, so far have brought in about $700 million year to date. And we launched the first one back in late March. So they haven't been around that long, and they've already attracted that much money.
And what's the relative attractiveness of that type of structure?
So in the ETF landscape, there wasn't these types of products. And a lot of the products that have launched, and using ours, for example, so I'm just going to give an example of Focused Dynamic Growth, which is out there. It's a very concentrated portfolio. Call it 25 to 40 to 50 holdings. That type of product really didn't exist in the landscape. There were a few, but now you'll see active managers who want to launch something that is more concentrated, that puts forward a more alpha-generating potential. And the ETF landscape didn't have that before. Out of those 2,500 products, maybe only a few did that. And you're going to see a lot more offerings from a lot of the bigger firms doing this as we go forward, especially into 2021.
So any themes you have for 2021 as it relates to the ETF sector?
Yeah, it's going to be interesting. So just so you know, the last 3 months, well, everyone knows 2020 was like a year of growth until the last 3 months, and everyone decided to invest in value and make that switch. And so, and I've heard that on your radio show before. And so now I think what you're going to see is people looking for places where they didn't necessarily think about it before. One, we may have new tax plans coming in, right, depending on what happens January 5th. That may cause people to use ETFs even more because they need to be more tax advantageous in the past. But I really think you're going to see investors start looking to add alpha to their portfolio, especially if 2021 is, as most people are thinking, sort of a calmer, flatter market.
Hopefully.
As we go forward. Well, let's hope calmer, but flatter is never good. We like the rise, but realistically, that's what they're looking for. And I think you're going to look for places where you can add alpha, potentially, and looking for these active portfolios. I think you're going to see more and more of that as time goes on.
Hey, Ed, thanks so much for joining us. We always appreciate getting your thoughts on the ETF business. Fascinating. Ed Rosenberg, head of exchange-traded funds at American Century, on the phone from Chicago talking about the ETFs. It might be maybe on track for a record inflow year yet again for ETFs. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Wednesday, December 30th. Where has the year gone, folks? From St. Jude Children's Research Hospital, virtually ringing that closing bell. This is the next to last trading session of 2020. Stocks climb, small cap shares outperforming in one of the final trading sessions of the year. The dollar continuing its slide, weakening to the lowest in 2.5 years. Records today for the Dow, the S&P, and NASDAQ. S&P at the close up an even 5 to 37.32, a gain of 0.1%, extending the year-to-date gain to 15.52%. The Dow up 73, up by 0.2%. NASDAQ up 19. For NASDAQ, that was a gain today of just about 0.2%. So again, records there. The Russell 2000, no record, did advance by 1% today. Russell 2000 up today by 20 points. Ed Rosenberg is head of ETFs at American Century Investments. He was our guest moments ago right here on Bloomberg Business Week.
This year, 2020, has been an amazing and interesting year all around. And as most people want to put it to bed, but in the ETF industry, flows are near record highs. I mean, 2017 was the record year for $476 billion in flows, and we're right there before we get to year end.
And the SPDR S&P 500 ETF did advance today, along with the S&P up today by 0.15%. Tesla's forecast to make 155,044 cars in the fourth quarter. That's according to Bloomberg NEF's surveillance system for estimating Tesla's vehicle production. Tesla, member of the S&P, up today by 4.3%. FedEx's price target raised to $305 from $270 at Argus Research, which cites optimism about the package shippers' 2021 prospects. Shares of FedEx down today by 0.6%. UPS lower by 1.7%. Recapping, S&P at a record up 5, a gain today of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
Well, we have a little bit of green on the screen here on New Year's Eve. Let's see if there was some action out there. Let's find it. We can do that with Sarah Ponzak, cross-asset reporter for Bloomberg. Sarah, what are you looking at?
Well, Charlie Pellet gave us such a nice setup, walking us through the fact that small caps outperformed again up 1%. Over the past couple of days, we have been talking about small cap underperformance. So we did see a change, a resumption of that cyclicality outperforming today. You saw that reflected in the industry groups and sectors as well. If you look at S&P 500 sectors, your leaders on the day are your classically value or cyclical areas of the market: energy, materials, industrials. Energy and materials shares all up more than 1%. And then at the bottom of the pack, you have either more defensively oriented sectors or your technology sectors too. So tech flat in the day, then you have staples down 0.1%, and communication services down 0.7%. But once again, like Charlie mentioned, second to last trading day of 2020. Can't believe it's here already, but very light trading volumes. If we take a look at where we ended the day, trading volume for the S&P 500 close to 30% below what's been average over the last 100 days. Still looking at shares and turnover settling out here, but that's still a healthy 9.5 billion shares that traded today. So still plenty of action, but not a lot for 2020 standards.
How about for 2021, Sarah? What do you think are going to be, when everybody gets back next week? What do you think the focus is going to be, maybe next week as people come back in? They've been out for maybe a week or two. What do you think the focus is going to be?
I wish I had a crystal ball, but likely, and in speaking with investors, the focus is still going to be what the focus has really been all year long on COVID-19. And now, as it's been the focus of the last quarter and the latter end of the year, the vaccine rollout, because we have heard that the vaccine rollout is going slower than expected. Are there going to be bumps in the road? Right now, mean, we have record highs across major stock indexes. We have a lot of optimism built into this market. The Russell 2000 is on track for its best quarter on record. I mean, we have seen a lot of positivity really baked into markets this quarter after the positive vaccine news that they came in much more effective than expected. They were going to be rolled out quickly. Now, if we come back from holidays, people get back to their desks, even if they're at their desks at home. Today, for example, we see that in New York, we have the highest daily number of coronavirus cases on record. And how much is this going to translate into hospitalizations? How much is this going to translate into deaths, unfortunately? And what does that mean for the standpoint of the economy entering 2021, possible shutdowns especially? We'll find out more about President-elect Biden's path and plans for really defeating COVID-19 on a national scale. So we have the inauguration early on. We will certainly continue to see these unfortunate COVID-19 numbers rising. And what does that mean for the rest of 2021? Right now, the expectation is in the back half, you're going to see all this pent-up demand really deployed. You're going to see a resumption of semi-normality. And right now, there's still a bit of uncertainty over whether or not we're truly going to get there and how quickly it's going to be.
So, Sarah, you're out with a great article today on the terminal, talking about I think it kind of goes to the issue of, boy, we've had a great stock market, but boy, you look at the real economy and it's a lot different. Talk to us about what you were writing about today.
Right, extremely different. If you think about extremes where we've been this year, you have $5 trillion added to U.S. equity prices, $5 trillion added to the value of companies in the U.S. Meanwhile, we're not at this level anymore, but at a point we saw 22 million people or even more out of a job. And what I looked at here was how companies have been going about spending their money in the year of 2020 and what their plans look like for the future. And thanks to a boutique research firm called Balance Research, they really focus on accounting analytics. What we found was that in 2020, the estimates are for investments in R&D, so intangible assets, to rise by close to 14%. And that is well above what's even been typical over the last decade. And this is a trend that's really been intact for a while now, especially after the financial crisis. But we've just seen it accelerated this year. And typically what that means is if you look at economic recoveries in which companies are focusing more so on R&D, intangible assets, rather than hiring people, boosting factories, looking to warehouses to fill, then usually these types of recoveries are more so labor-like. It takes much longer for the labor market to recover. So whereas this has been a trend that has bolstered the stock market throughout 2020, adding, like I said, $5 trillion to share prices, rather it's really not filtering through to the real economy. And you also have to wonder whether or not they have different wants and needs, and they do.
And that kind of brings us, I think we were talking about this maybe in a little bit different way before the pandemic in the context of record low unemployment. The question wasn't so much the overall employment number, it was the, maybe the quality of that employment. Was there an underemployment in this economy kind of creating, a have and have-nots or, much different, inequality in terms of income and wealth?
Right. Wealth inequality has been a worry for quite some time now, as it was definitely highlighted throughout the entire presidential cycle and this past year as we were heading into the election. And this year has only exacerbated that. And one of the most clear-cut ways of viewing this, and one of the ways that it's been cited, I mean, we heard it in plenty of debates, too, between President Trump and Biden, is that difference between you can look at a soaring stock market and then you look outside your window at what's going on right now and people are getting COVID-19, people are passing away, many people are out of work, many people are unemployment. So it's two different worlds.
It really is. Hey, Sarah, thanks so much for joining us. We appreciate it. As always, Sarah Ponczak, cross-asset reporter for Bloomberg News. Always appreciate getting her thoughts on markets across the board. And again, she has a very strong and interesting story out today talking about some of that dichotomy that we're seeing in the marketplace. Again, the issues, I think, as people come back to work, come back into the markets on the new year, it'll be the pandemic, the pace of dealing with the pandemic, and the economic fallout from that pandemic. light at the end of the tunnel, but it's still a ways to go. Right now, let's head out to our San Francisco studios and Ed Baxter for World and National News. Ed.
Yeah, hey, Paul. UK trade agreement with the EU is on course to finality in just hours. With it passing the House of Commons, Prime Minister Boris Johnson says it's time to
prepare our fishing communities for that moment. We will invest £100 million in a programme to modernise their fleets and the fish processing industry, restoring.
Now, he still says it needs to pass the House of Lords, which in practice is a rubber stamp. U.S. vaccinations running at 200,000 a day, far short of warp speed predictions. Joe Biden Press Secretary Jen Psaki.
What are the holdups? What is halting the ability to get the vaccine out to communities, out to health centers?
But the head of Operation Warp Speed, General Gustav Perna, says things are speeding up.
We've allocated and will be available for final ordering 20 million doses by this Thursday. Distributed more than 14 million doses of vaccine to over 10,800 locations.
While the wait is on to see what the U.S. Senate does about relief and veto override, there's still the underlying threat of what may happen when Congress confirms the Biden victory next week. House Speaker Nancy Pelosi says she's not worried.
I have no doubt that on next Wednesday, a week from today, that Joe Biden will be confirmed by the acceptance of the vote.
And in California, Governor Gavin Newsom is proposing a $2 billion plan to reopen schools.
Tightening up the old guidelines, strengthening them as we now move into this new phase.
Yeah, he says it can happen very soon or as late as spring. He says districts and schools need to plan right now. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Charlie, I don't know about you, but I've been commuting in and out of Penn Station on a daily basis for 30 years, and it's an experience, is all I can say.
You know, I was going to see how you would choose your words for this segment here. So let me tell you, there are three things that New Yorkers have very strong feelings about. And those three things would be pizza, the Red Sox, the BQE, and bagels. That's four. I know. I'm keeping count. We're at Bloomberg. We keep count of things. But the three other things that New Yorkers really have passionate feelings about include LaGuardia, Times Square, and Penn Station. Now, for people who are not in New York City, for people who have never been through Penn Station, let me give you a description of what this station is. 7 levels of hell. Now, before the people who control editorial criticize me for saying that is what I described it as. No, those words, 7 levels of hell, that comes from our governor, Governor Cuomo. Now, why are we talking about this? Because January 1, guess what? We're getting the new Penn Station, Moynihan Train Hall, and I know you can't wait for that.
Yep. It is. It's amazing. It's spectacular, and it's going to really be a relief for a lot of commuters. And sometimes, the train will spit me out and I'll walk up some random stairway thinking I'm going to come out in the old Penn Station, and it drops me off in, what is the new Penn Station. I'm like, where am I?
You know what, though, Paul, but that's a good thing, and I'll tell you why. That means the construction is underway, and it's, doing this kind of project with a moving train station underground, it is incredibly complicated. So you don't get a lot of sympathy from me on that, but I understand your frustration.
Now the next thing is for us, particularly us in Jersey, is the gateway, is getting those 100-year-old tunnels that go underneath the Hudson River that were damaged severely by Superstorm Sandy, to get those replaced, and that will allow us to, I think, more safely traverse or go underneath the Hudson, but allow for much, much more efficient train travel throughout the entire Northeast, and hopefully President-elect Biden can move that forward. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Governor Newsom says the UK virus strain has been found in California. This according to NBC, but worth repeating. Governor Newsom says the UK virus strain has been found in California. An update on Wall Street with the Dow, the S&P, and NASDAQ all advancing. S&P 500 index up 5, a gain there of 0.1%. The Dow up 73, up 0.2. NASDAQ up 19, up by 0.1%. 10-year up 4/32, 10-year yield 0.92%. Gold up 0.7%, 18.92 the ounce. West Texas Intermediate crude up 0.5%, 48.26 a barrel on a WTI. Small cap shares outperformed. Today we had the Russell 2000 up by 1%, extending its year-to-date gain to 18.7%. By comparison, the S&P this year up by 15.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Well, it looks like the fiscal stimulus is done. Checks will be mailed shortly. It's $600 as opposed to $2,000. The real question, I think, for a lot of folks as we come back to work next week is what does that mean for the economy in 2021 and is more needed? To answer those questions, we welcome Andrew Husby, U.S. economist for Bloomberg Economics, joins us on the phone from New Jersey. Andrew, thanks so much for joining us here. Give us your big takeaways from this fiscal stimulus plan that just passed.
Sure. Well, thanks, Paul. So effectively, the plan that just passed, worth around $900 billion, was really just sufficient to keep things running into both year-end and into early 2021. It does contain stimulus checks. It contains a temporary top-up to unemployment benefits, includes small business aid. So a package like that was effectively what we had been penciling in our baseline projection. Now, where this got a little bit interesting and could still get interesting after next week is this proposal to lift those stimulus payments to $2,000 versus the $600. And we think if something like that comes through, that roughly could be worth about a percentage point, maybe a bit more on economic growth next year. So while the recent package didn't really move the needle for us, this sort of a deal, again, depending on the outcome of perhaps the Georgia Senate runoff elections on January 5th, may take a few days to count those votes, but which will, of course, decide control of the Senate. Something like this or similar to it with tweaks could come back in the picture. So I think that's really the key thing to keep in mind at the moment.
Where are we on aid to states and local municipalities? I think we're seeing maybe one of the results of lack of funding in some states, some areas. When we look at this vaccine distribution plan, some of the states are saying they just don't have the resources to adequately deal with it at this point, giving some funding challenges. Where are we in terms of fiscal stimulus going to states and local municipalities?
That was one of the key elements that was left out of this bill in terms of larger size. There is some aid, there is some help for vaccine distribution, and in some ways the unemployment benefit top-up does help that picture a bit for states as those programs are run by the states. But certainly you would expect a bigger kick to growth if you got a little bit more money to those states. There's some question, how deep the budget gaps are. They're certainly not quite as bad for a lot of states than was feared earlier in the pandemic, but certainly this is still a slow-moving soft patch that is sort of underlying the sharp lockdown sort of recession hit. So we think that becomes more manifest next year, and that's, I think, we still think is very important to at least look at that sort of funding next year. But certainly it's not a huge portion, and I think, again, you'd like to look at the elements that are providing a constraint right now, and it is vaccine rollout and UI benefits, which will really determine how well growth gets going into the second quarter and mid-year next year.
What do we know, Andrew, about President-elect Biden and his thoughts on fiscal stimulus? Obviously, a large part of what he can get done in Congress will depend in part upon what happens with the Georgia race, but has he laid out any, economic outlooks that require a certain amount of fiscal stimulus that you suspect will be perhaps better than what we've seen to date?
Yeah, so there we do still think it's going to be difficult to early pre-election you were seeing numbers thrown out about to say $2 trillion in additional stimulus, infrastructure plans. It's still difficult, we think, to get something like that done. Even if Democrats win control of the Senate, it will still be effectively the narrowest margin possible at a 50-50 tie. So, and there are some more centrist Democrats who would still be reticent to really jump on a big deficit busting package. So I think there's some space there, but we think that's still constrained to say, an additional $500 billion to $1 trillion as an upside if that does happen. So, but we do think there will be an emphasis at least to try to get more aid to families. There will be more emphasis on trying to get more investment done at the local level as well. That does tend to give more rewards for the economy over the longer term.
Andrew, I guess in the more shorter term, obviously we're seeing these terrible pandemic numbers out there almost on a daily basis, including today, various lockdowns in various states and localities. What is Bloomberg Economics' outlook for GDP in the first quarter? Could it, in fact, contract again?
Yes, so that is what we are looking for. We're seeing some deterioration in jobless claims. We're going to see how the holiday shopping season shaped up, and certainly a lot of those key areas that normally provide a lift, like restaurants and some areas in retail, those really are still going to be pretty hammered, depressed this year to end the year, and it's going to be a soft start to Q1, we think. So we do see a small contraction in the first quarter, and then growth only really starting to pick up in the second quarter. And this all assumes that the vaccine rollout does roll out as planned. But certainly the motion right now is still towards these lockdowns remaining in place, and there's always the potential that they do get a bit worse than we expect. But we are in the camp that does see a small contraction in Q1.
And for 2021 full year, what's Bloomberg Economics calling for in terms of GDP?
Yep, 3.5% year over year. That has roughly been that has been our estimate for some time now. Again, this aid package didn't move the needle on that, but we do see better times in 2021. Certainly, that would be good news after 2020, which will be it'll be near the worst contraction on record for the U.S. economy.
Andrew, thank you so much. We really appreciate it. Andrew Husby, he's a U.S. economist for Bloomberg Economics, a great group of economics folks for Bloomberg Intelligence, really breaking it all down. He joins us on the phone from New Jersey. So we will have more coming up. And again, looking for potentially a contraction in the economy in the first quarter. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to talk about the movie theater business. Boy, it's been decimated here by the pandemic. No one is going to theaters. Most theaters are closed, and that's wreaking havoc on a lot of the public companies. We'll get the latest on that. But first, let's go to Charlie Pella, get a Bloomberg Business Flash.
Hi, thank you very much. And here's what's going on. The Dow, the S&P, NASDAQ all climbing to records today. Stocks advanced with small caps leading the way higher today. The Russell 2000 up today by 1%. Small cap shares outperforming in the next to last trading session of 2020. The dollar continued its slide today, weakening to the lowest in 2.5 years. Automakers among the best performers in the S&P 500 index today, with the S&P up 5, a gain of about 0.1%. The Dow up 73, up 0.2%. NASDAQ up 19, higher by just about 0.1%. Well, as for the economy and markets heading into the new trading year, Jim Paulson is Chief Investment Strategist at Luthold Whedon.
I like the idea that we're going to have probably in 2021 the fastest world growth rate in a long time, and particularly in the United States, maybe the fastest growth here. It's going to be around 6%, so maybe since 1984.
Well, railroads, freight railroads, definitely a critical part of the U.S. economy. The Federal Railroad Administration says American railroads have completed installation of an automated crash prevention system that covers 57,536 miles of freight and passenger tracks ahead of a year-end deadline that was previously extended. It's known as Positive Train Control. It came under a federal law that was passed in the aftermath of that deadly 2008 commuter rail crash in Los Angeles that killed 25 people. Among some of the freight names today, CSX up 1.1% today, Union Pacific up by 0.8%, and shares of Norfolk Southern up today by 0.9%. Again, recapping, equities higher, S&P up 5, up 0.1%, 10-year yield 0.92%, gold up 0.8%, 18.93 the ounce. I'm Charlie Pella. That is a Bloomberg Business Flash.
Charlie Pello, thank you so much. We appreciate it. Boy, when you think about the movie theater business, really been hit very hard with this pandemic. They operate on very thin margins to begin with. But then basically when you shut them down, what are they to do? And it's a very, very challenging sector of the entertainment space. To get some latest color on that, we welcome Kelly Gilblom. She is the entertainment reporter for Bloomberg News, and she joins us on the phone from Los Angeles. Kelly, let's talk about AMC. One of the largest chains here. They are really trying to hang on here. What's going on?
Yeah, thank you so much. And I think you hit the nail on the head. It has been a terrible year for AMC and pretty much all the movie theaters. In March, like a lot of businesses, they had to close all their locations, which includes about 1,000 theaters between the U.S., Europe, and a few other markets. They've slowly reopened over the year, but the situation has been so difficult because most studios have delayed their new movies. So there's nothing to show. And when they do have something to show, they have to cap ticket sales to make sure customers are social distancing. And in some locations, there's even been periods where they aren't allowed to sell concessions because they encourage people to remove their masks. So they've basically seen their revenue collapse to close to nothing. And the CEO of AMC, Adam Aron, he said numerous times this year, this is, the worst thing he's ever dealt with, and definitely the worst crisis that the exhibition industry has dealt with.
Yeah, it's just been brutal. To make it even worse is, okay, when you think about reopening this economy, people will hop on planes, they'll probably get back into cruise ships, but it's not certain about the movie theater business because the big movie companies, the Disneys of the world, the Warner Brothers of the world, they've been putting so much of their content, their movies, on their streaming services. And the question is, when movie theaters do open up, will they revert to the old model and, in fact, embrace the theaters, or will they keep more of their content on their streaming services? What do we know?
Yeah, it's a real open question as to what happens after the pandemic. The only studio that's given any indication of what will happen when the vaccine is widely distributed and businesses reopen in a big way is Warner Brothers. They said they'll put all their 2021 movies through to the end of next year straight to HBO Max, which is the service also owned by their parent company, AT&T, the same day they hit theaters. Others have been doing this kind of piecemeal, making one-off decisions about this, and they haven't given a long-term projection. But this is a huge blow to an industry that's already struggling. AMC, in particular, has been fighting this passionately. Normally theaters get 90 days when a new movie comes out to show it exclusively. And that's gone to now nothing. And studios have been able to do that because of the circumstances of the pandemic. We had Wonder Woman that came out on Christmas Day on HBO Max and in theaters. And it definitely siphons off some of the customers that would get off their sofas and watch this in the cinema. I don't think day and day the streaming theater release concurrent pattern will be the norm. But I do think there's going to be a very serious renegotiation between studios and cinemas when this comes back, where they have more of a dynamic model, which hopefully works for both parties.
In the meantime, Kelly, are these theater companies, are they going to survive?
I don't think they will all survive. Some of them, it's, probably not going to happen. But I think the big ones probably will. For AMC, they've been kind of on the verge of filing for bankruptcy for most of the year. And we've been wondering, is it coming any day now? They said in the filing, reiterated just today, how desperate they are for cash. By early next year, they need $750 million to stay solvent through even January. And that's going to be really tough for them. But I do think if they do go into bankruptcy, the big chains, and AMC seems to be the one most at risk, it is going to be a rather orderly process. I think it's going to be a restructuring. They're going to have a plan going into it. They're going to have their financing in place going into it. I would say the independent theaters and the smaller companies are more at risk. But, you did just see something great for them recently with this new stimulus bill. There's $15 billion set aside specifically for those smaller companies. So that's going to be a real lifeline and hopefully keep a few more of them in business.
Hey, Kelly, thanks so much for joining us. We really appreciate it. Kelly Gilblom, entertainment reporter for Bloomberg News, joining us on the phone from California, talking about the theater business. And it's very, very difficult for that industry to survive here. There's no one allowed into the theaters, of course. And then you have the risk of them not even providing movies as we go forward. So very challenging time indeed. We'll have more coming up. This is Bloomberg. Right now, let's go to San Francisco. Ed Baxter for World and National News. Ed.
All right, thank you very much. Senate Majority Leader Mitch McConnell says he will not bring a standalone relief check raise of $2,000.
The Senate committed to beginning one process that would combine three of the president's priorities: larger direct checks, a repeal of Section 230 of the Communications Decency Act, and further efforts to review the integrity of our democracy.
He says he hopes everybody understands the process. Senate Minority Leader Chuck Schumer does not.
A move like this is really a blatant attempt to deprive Americans of the $2,000 survival check.
Meanwhile, the variant of the virus is spreading. California Governor Gavin Newsom now.
We were informed that this new variant, this new strain that we've identified, obviously from the United Kingdom, some other parts of the globe, identified in Colorado yesterday, has been identified here in the state of California.
Newsom also proposing a $2 billion plan to begin reopening schools, and more complaints coming about the slowness of vaccine distribution. This one from Florida Governor Ron DeSantis.
The COVID-19 vaccine supply is still limited. We don't have enough vaccine currently on hand for all 4 million plus senior citizens.
But the head of Operation Warp Speed, General Gustav Perna, says a speed up is on the way.
I visualized as early as 8 January, between 8 and 15 January, The expansion to their utilization will greatly increase access of vaccine to the American people.
There is just now a push out on AP saying that the Census Bureau plans to announce it will miss year-end deadline for the numbers used for divvying up congressional seats. That developing now. We'll get you more in San Francisco. I'm Ed Baxter. This is Bloomberg.
So, Charlie, I'm not sure how much you post to TikTok, but an article in the Terminal here, really interesting here. A London judge granted a 12-year-old girl anonymity so she can take TikTok to court over allegations the social media company violated the European Union's strict data protection rules. The London child, quote, interest to go to court asserting rightly or wrongly that her privacy rights and those of others like her have been infringed in ways that call for a remedy, unquote. Judge Mark Warby said in the decision Wednesday, not granting her anonymity could have a chilling effect on the bringing of claims by children to vindicate their data protection rights.
Indeed, and it's a fascinating story out of Europe. TikTok coming under increased scrutiny by several EU data watchdogs over children's data. The EU data protection chief back in June pledged to coordinate potential investigations into the Chinese company, establishing a task force to get a better understanding of, quote, TikTok's processing and practices.
Yeah, this is a big story for the couple of reasons. One is TikTok has just become so incredibly popular, particularly with younger people, and for the second reason, it kind of puts to test some of these really strict data protection rules that are in effect in Europe, not in the U.S., with the exception of the state of California. So this is really a big test for these data protection rules in Europe that all big technology companies really have to think about, whether you're a Google or a FaceTime, but TikTok is big.
Indeed, and it was also interesting, too, in hearing what the rationale was for this. And by the way, just want to say, completely agree with your assessment of what's happening in Europe with privacy. How soon until that comes over to the United States? And the answer is yes, it's on the way. But one of the concerns here was that identifying this minor would risk, quote, direct online bullying by other children or users of the TikTok app, and the judge said that behavior is reasonably foreseeable.
It is, and yeah, it really is. And I think the issue here is, will some of these issues be coming, in terms of regulation, be coming to the U.S., and we'll pay attention to this story.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Update on Wall Street today with the Dow, the S&P, NASDAQ all advancing today. Stocks climb, small cap shares outperforming in the next to last trading session of 2020. We saw the S&P 500 index up 5, a gain of 0.1%, ending of the day at 3732. Dow Industrials up 73 points, a gain of 0.2%. And as I mentioned, NASDAQ up today by about 0.1%, up 19 to 12,870. So stocks led higher by small caps. Russell 2000 up 1.1%. 10-year yield 0.92%. Gold up $15 the ounce at $18.93, up 0.8%. West Texas Intermediate crude up 0.7%, 48.34 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Well, many of us have been working at home, working from home, and learning from home for about, I call it 10, 11 months here. We've learned to embrace Zoom and other products that help us kind of do our business and be productive. Our next guest has a product that is entitled, is geared towards increasing and improving productivity. Darren Chait, co-founder and chief operating officer of Hugo, located, and he joins us on the phone from Sydney, Australia. Darren, thanks so much for joining us here. Tell us about Hugo. What do you guys do, and how's your business been impacted by this pandemic?
Sure. Thanks, Paul. Thanks for having me. So Hugo is a tool for better meetings through centralized actionable notes. So Hugo is all about taking the meeting agendas and the note-taking from the meetings and connecting it to all the other apps we use, the likes of Slack and Salesforce and Jira and Trello and all the apps we're using every day to allow everyone in the business to have access to what's happening in these meetings. And that really came from the explosion of meetings that we've seen over the last few years. And specifically during 2020 and the impact of COVID, the number of meetings has gone through the roof, quite surprisingly. So that's enabled Hugo's growth over the last 10, 11 months.
Yeah, it seems like we're spending, if it's even possible, more and more time in meetings as opposed to when we're in the physical realm of everybody in the office. Give us a sense, kind of who you guys compete against and kind of where you position your software into the marketplace.
Sure, absolutely. So as we know, taking notes in meetings is a latent behavior. We all do that in business, in almost every industry. And the sort of best solutions out there before Hugo were your likes of Google Docs and Evernote and the everyday note-taking tools. But the challenge you have with a generic documentation or note-taking tool is there's no relationship to your calendar. Your calendar is the source of the truth. That's where it says that, you know, I had this meeting here with Paul and this call over there with that client, and the source of truth for who I'm meeting. So what Hugo does is it uses your calendar to organize all the agendas and all the notes by the people and companies you're meeting. And then it connects to 20-odd other apps where work gets done. So I can pull up the notes, the agendas by the people I'm meeting, and I can push out all the actions to share with the team via Slack, to create sync with my CRM, to update the client record, to create a task or ticket in my project management tool. So that's sort of the key difference between Hugo and our competitors, like I mentioned.
Talk to us about your business. I would think, you know, like a lot of work from home services and products, you've seen a big spike in business. Talk to us about that.
Yeah, absolutely. So I'm typically based in San Francisco. Actually, I went home to Australia for a week vacation in March, and here I am in December. That's still in Australia. But for our business, we've seen more than 300% growth over the course of 2020. And interestingly, we didn't expect that. I recall sitting in our San Francisco office in the early days of the pandemic and thinking that as meetings declined, so would the use and growth of Hugo. And the decline of meetings seemed inevitable. I mean, sales pipelines were drying up. We couldn't travel as professionals to meet people and attending meetings like we all would. So we thought we'd see a decline, but the inverse has been true. We've seen more than 40% more meetings per person per week than we had in previous years. So for Hugo, it's been a really strong year. We were also fortunate. We locked in some investment. It literally closed, I think, on the 1st of February before COVID was obviously well understood in the United States. So that was pure luck, to be honest, from a timing standpoint. And having Google and Slack as two of our key investors behind us right at the beginning of the pandemic really helped as well. So it's been a good year from a business growth standpoint, notwithstanding the human challenges we've all faced.
What are the growth levers for your company here? I mean, obviously, there's the organic growth of existing customers just spending a lot more time using your product as they spend more time in this online environment. What are your growth drivers for 2021 and beyond?
Yeah, absolutely. So Hugo is one of those products that we like to say is driven by product-led growth. So we don't have a sales team. We don't have people, pounding the sidewalks, picking up the phone, looking for business. The use of Hugo leads to more customers and exposure. A bit like you'd think with Zoom, right? We have our Zoom call. It finishes. You're like, that was a great experience. What is this Zoom thing? And next minute, you're a Zoom customer. So we definitely have that dynamic. But from a trend standpoint, looking forward to 2021, we've seen a very strong trend around asynchronous collaboration. So when you and I want to work together, it's typically meant we have to hop on the phone or on a Zoom call or in a meeting. The way the world's going, and I've experienced this firsthand being, 17 hours behind our head office in San Francisco, well, ahead of our head office in San Francisco, is the ability now to be able to collaborate without us both being online at the same time. So how do we share content? Can I send you a quick video with feedback or an idea or my concerns or thoughts, which you can watch at your convenience? Can you not attend the meeting and just read the notes and see the actions? So that trend, which has absolutely been enabled by COVID, is a very strong growth trend for us heading into 2021.
So, Darren, how are you guys thinking about, when we come to the other side of this pandemic, presumably there will be some resumption of normality as it relates to the work environment, the work flows. People will be going back, again, to some undetermined degree, back to the office. How are you guys thinking about that?
Yeah, we're definitely on board with I think it's becoming quite mainstream thinking now that there will be some sort of hybrid in most cases. And the reason is that as an employer, you've now seen the light. You've been exposed to the cost savings, the flexibility, and the ability to hire globally. And going back to a traditional office environment doesn't make sense. But on the employee side, the same applies. We now have employees who are very comfortable at home at least some of the week, where they can work on their schedule. They can base themselves wherever they want. So I can't see an environment where it makes sense for employer or employee to be back in the office permanently. There's too many benefits all around to stay the way we are. And a lot of the sort of slower trends that were around the use of technology to enable this have now been rapidly accelerated. The smallest small business based anywhere who never had exposure to the likes of Slack and Zoom and Microsoft Teams and some of the best technology out there for remote work have now been forced to experiment and see success with these solutions. So I can't see a world where we go back to where we go back to something that looks anything like what it did pre-pandemic.
It's going to be fascinating to experience that. And I think, starting probably in the back half of this year, we'll have to see how a lot of different industries, a lot of different companies, a lot of different regions of the world, how they kind of adapt there. It's going to be fascinating. Darren Chait, co-founder and chief operating officer of the firm, goes by the name of Hugo, a software company providing tools for people to work more efficiently from home. He joins us on the phone from Sydney, Australia. Just one of those companies that's, really right place at the right time with the right product, and they're seeing just some extraordinary growth here. But of course, the question is, as you think about 2021 and 22, what will the work environment look like? How remote will it be? Will we be going back into our offices? And if so, how frequently? It would be fascinating to see how that plays out. This is Bloomberg.